And learning more about personal finance lately, I've realized there's a lot to learn, but not all of it applies to everyone. If you could only give someone 3 lessons on personal finance, what 3 things do you think everyone should know that really helps move the needle in building wealth? Roger, I'm going to go to you for your 3 first.
You don't have to do the triple Lindy off the high dive. You don't have to do the reverse flea flicker, and you don't have to run a fancy offense. No, I'm totally joking. But people think it's that complicated.
Yeah.
And I always got this from Jonas. When it's first and goal, you just punch it in. You don't become the Seahawks who have Marshawn Lynch and decide to pass it and lose the Super Bowl, and they have Marshawn Lynch as first and goal. With that said, in all reality, I thought a lot about this. And I think one of the biggest things about building wealth and moving the needle is really about simplicity. So I thought about what's the simplest way to start? Because most people, step 1 is getting started. Jonas talked about the 401k. Step 1 would be opening the account. So I would say the number 1 piece of advice, get started. 2, saved often, meaning automate this. I talked about my experience with my solo 401k.
Right.
It's automated. I don't have to think about it. I've automated all my investments to a weekly basis. Every week, same amount comes out. Guess what? About every 6 months, I increase it a little bit.
Yeah.
So that's number 3, constantly increase what you're saving. If you get started, you make it automatic and you increase your contributions over time, more than likely it will work out. And I think what's interesting about that advice, someone was thinking I was going to give them the triple Lindy.
Yeah.
None of that has to do with any investment whatsoever. That is just the process of doing this.
There wasn't a stock, a hot stock?
No stock, no investment pick, nothing.
You're kidding me.
Think about this.
With all the AI opportunity out there?
Think about this though, Jonas. If someone just did that and put it in a savings account, so arguably the worst long-term investment out there, they'd still be in pretty good shape. They would be.
Absolutely.
I mean, would they be as successful as they could be? No, but they would save up a pile of money. If they got started, they automated it, and they constantly increased their contributions.
It's so interesting because, you talked about 1978, the dawn of the 401k, and prior to that, it was all pensions. And I remember my dad's retirement. It was all, that whole thing's pensions. There's so many people who were in that. It's funny because you got this 401k that's out there, and there are billions of dollars left on the table by people who don't do that and take advantage of the max that they could get out of a 401k match.
The company match, my brother works at a factory, and I talked to him on the golf course, and he said probably 50% of the new hirees do not contribute to the 401k because they want their money. They're skeptical about it.
Wow.
And I tell my brother, Jason, just let them know the 401k has been around for 50 years.
Yeah.
Hey, Jonas.
Twice their age.
You know what my question is? How many are contributing but don't know because of automatic enrollment?
Right.
Yeah.
Because now they actually have to opt
Beautiful.
out.
Right.
They might not even know they're contributing.
Yeah.
Because they didn't opt out.
That's beautiful. That's a great thing.
Jonas, your top 3 pieces of advice for Clint here.
First off, Clint, the best time to plant a tree is yesterday. So like Roger said, get started right away. Second thing, and probably the biggest, is don't try to keep up with the Joneses when it comes to personal finances. Once you're moving through your financial journey, you're always going to have neighbors that have the new SUVs and the new tile and the new kitchen and go to Disney 3 or 4 times a year. You're not going to be able to keep up with those people. I mean, you could try, but you're probably not going to have a very good financial performance later on in life. Pick something that you like to do. Figure out what type of a financial person you like to spend money on. I talked to a friend that had a business that actually, it was a real estate business. And because of the 2008 real estate crisis, it actually had a little bit of trouble and went out of business for a while. And I said, how do you feel right now? And he's like, I'm not as wealthy, but I figured out that my flexible schedule now, I'm able to hunt, I'm able to fish more than I was before, and I'm not as worried about money. So don't try to keep up with the Joneses. And really the third thing, try to beat a dead horse here, is save before you spend, because I think ultimately people forget, like Roger said, about these matching contributions, right, and you have to opt out to get in a 401k. Once you get into that 401k and you assign a contribution rate of at least 10%, you're going to forget about that within 3 months. And you could have looked back and said, I may have only saved 3%, but you're saving 10%. And then all of a sudden 5 or 10 years go by so quick. So,
it does make sense. Pay yourself first. In other words, it's a really good idea. The whole thing comes down to getting a financial plan and making sure that you have somebody that can work with you. You could do it on your own if you have the time, you have the talent, you've got the desire. But for so many people, you can have the desire and you can have the talent, but the time's just not there. That's why wealth advisors like the ones at Premier Investments and Wealth Management are so critical to you, because they can help you create the financial plan. Now, it's your financial plan, not theirs. It's not cookie cutter. This is just like your thumbprint, just like your individual finger or thumbprint. So go over to premieriwm.com, click Get Started, answer a few questions. They'll provide for you a one-page Premier Vision document and a free consultation, whether it's in person, over the phone, or over video conference, whatever. They will get in touch with you and they'll hand that document off to you or give it to you at the back end of it. I'm a customer here at Premier Investments and Wealth Management, and it's one of the things that I know that I've seen the difference it can make for people, because it gives you that initial roadmap. It gets you started. That's what they were talking about. PremierIWM.com is the website, and you can also call to make an appointment, 800-383-6590. You can make an appointment online at PremierIWM.com. Premier Investments and Wealth Management, Forbes 2025 Best in State Wealth Management Teams.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Rebalancing a portfolio may cause investors to incur tax liabilities and or transaction costs, and does not assure a profit or protect against loss. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Contributions to a traditional IRA may be tax deductible in the contribution year, with current income tax due at withdrawal. Withdrawals prior to age 59.5 may result in a 10% IRS penalty tax in addition to current income tax. Consult your tax professional about eligibility to Roth and traditional IRA contributions. Contributions and earnings in a Roth IRA can be withdrawn without paying taxes and penalties if the account owner is at least 59.5 and has held their Roth IRA for at least 5 years. Traditional IRA account owners have considerations to make before performing a Roth IRA conversion. These primarily include income tax consequences on the converted amount in the year of conversion, withdrawal limitations from a Roth IRA, and income limitations for future contributions to a Roth IRA. In addition, if you are required to take a required minimum distribution, RMD, in the year you convert, you must do so before converting to a Roth IRA. This recording contains only general descriptions and is not a solicitation to sell any insurance product or security, nor is it intended as any financial or tax advice. For information about specific insurance needs or situations, contact your financial professional. This recording is intended to assist in educating you about insurance generally and not to provide personal service. They may not take into account your personal characteristics, such as budget, assets, risk tolerance, family situation, or activities which may affect the type of insurance that would be right for you. In addition, state insurance laws and insurance underwriting rules may affect available coverage and its costs. Guarantees are based on the claims-paying ability of the issuing company. If you need more information or would like personal advice, you should consult an insurance professional. Forbes' Best in State Wealth Management Team's ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firm. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.